A rally in this security has been confirmed. Welcome to Sunday Night Charts. We take a look at the charts to help you with a trading week ahead. I'm your host, Steven Van Metre, and it's good to be back and get into the charts. Let's take a look at the moving averages. 21 days red, 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is a general direction. Prices are momentum is the rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with timing trade, and provide the direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Nothing has changed. Now, you might kind of wonder is why is momentum bearish? What it's telling you is the rate of change is slowing. It's not moving as quickly. So let's take a look at the SPY because, well, it seems unstoppable. It came out of this little range. I thought perhaps this would be our upper bound of a trading range. And maybe it is, but if it is, it's really short because it's grinding higher, almost effortless. Now, not huge moves, but it's still moving higher. Bulls are all over this. You see it's following its 21-day moving average. But what momentum tells you is the rate of change of this move is not as fast as before. It's slowing down. So, again, we've seen the momentum stuck here. Bearish has no impact on price at the moment. Let's take a look at the NASDAQ 100, the Qs, and all we see now is a momentum on the 21-day moving averages flip bearish. All the other above all the other moving averages, the longer-term momentum signals are positive and rising. In fact, you're seeing the identical scenario to the SPY. But we get a little different picture of the chart because on the SPY, you see this huge volumes profile zone. There's a lot of support, a lot of shares traded here on the 6-month chart. And somewhere up here, there is a sell zone somewhere. Maybe this was it right in here, and it's breaching up. But let's take a look at the Qs, and you can see it's building the supply zone. See prices rally up, and you start to run into sellers. So potential supply zone building here where you see people selling tech stocks. There's a huge base below. I mean, it would have to, you have to see QQQ drive below this 330 to 340 range. I mean, into the 320s. So there's tons and tons of support there. The question is, are we seeing, the early stages of a supply zone building? And you have to kind of look back and say, yeah, it kind of looks like one. So at the moment, we're going to have to call this a supply zone, a sell zone building here. What you would want to see is confirmation of it as price move down, supporting that this is where sellers are at, or if prices move up, then the supply zone has been breached, and it was a very, very small one. But typically you see it oscillate in between them until it breaks out. So we'll see how that goes. Not the clearest bullish picture that you could look for. How about small caps? Now remember, we got a keen eye on small caps on IWM because small caps lead the large caps, and when they aren't following higher, you should have caution. And let's take a look. We have a 21-day price flip bullish, as is the 100-day moving average. Momentum unchanged. We now see it's below its 90-day moving average. Not a big issue here. Remains below the 50, the 100. The only green spot is a 21-day moving average. We can see the 3-month momentum is now positive, rising, moving up. 6-month momentum also moving up from negative and falling to negative and rising. So some positive indicators on the longer term momentum signals, but nothing else really moving too much. Those moving averages are sticky. Let's see how sticky they are. Go over here to IWM. And what you see is we're in this longer term. Whoops, since we're on the 2-year chart, you can see this is a massive sell zone in a bigger picture. So you see there's a sell zone and a buy zone, but this is a massive topping pattern. You can't read this any other way because at some point this should break out. And it's not. It keeps fighting against those moving averages. You see it remains below the 50, below the 100. The 21 days bouncing in between. For all we know, that it will move below that early next week. And look at the volume profile. You can see most of these shares traded right here, and it runs into that heavy volume profile line and gets sold. Runs into it and gets sold. So picture on IWM remains bearish, but can it continue going sideways? Sure. Absolutely can. Let's take a look at the transportation sector, another place we look at to see if the market is likely to head higher or lower. So on the 21-day moving average, price flip bullish. The 1 and 3 month momentum are now negative and rising. Those are positive indicators back above the 21-day moving average. So there's some signs, at least looking at this. I haven't looked at the chart all week, but let's just say the initial picture should tell us we might be in the early stages of a bottom pattern in IYT, not IWM, IYT. Where is IYT? There it is, and there's some, and there you go. So some initial signs of a bottoming pattern. All it's doing is coming up and tagging now. The bottom is 50-day moving average. Remember, when you're looking at the top down and you see a trend building, it crosses the 50-day and reconfirms the bottom side of it. That is bearish confirmation. It's right at its huge volume profile for the last 6 months. Picture for IYT still remains bearish at this point, even though buyers bid it right back up into there. The trend is telling you lower. All right, let's go on to the energy sector. And despite inventory levels being under their 5-year averages, there's still no movement higher in the energy sector. Let's take a look. Price on the 50-day moving average flip bearish, but momentum turned bullish. And listen, on the price, 100-day moving average bullish now, obviously must be turning higher. And it remains below the 9-day moving average, not a big deal, or actually moved below, above the 21-day. So it's some early signs. The 3-month momentum is now negative and rising. And let's take a look at what's going on with XLE. But let's first look at crude. We haven't looked at crude. I haven't looked at charts in almost a week, so so this is exciting almost to see what's transpired. And what do we see? It's following the 21-day moving average lower. There's a huge amount of volume support at 65. You can see it here. If you watched the Real Vision interview with Tracy Schuchart recently, she told you it hit 65, it's going to get bought. Well, it hit 65 and got bought. Hit 65 and got bought. The momentum on this trend looks like it's going to come back down to 65. We'll see if it continues to get bought. You see the 50-day moving average is flattening out, starting to roll over. 21-day guiding it lower. Let's take a look at XLE. And what do we see? A potential bottom now forming in the energy stocks. You can see here this volume profile line is now acting as support. It came down below, popped up, and now there's sellers in here, obviously, but there's buyers here. The path now tells me that potentially there's a move higher in XLE. Where would it go? Well, you would be looking at this $52 price range as it moves up. Why would it likely come up to there? Well, there's that 50-day moving average. We saw that with IYT crossed down through the moving averages. It's moving up through the 21-day, but the bigger trend says it's got to knock through the 100-day and 50-day to confirm those trend higher. If it runs into resistance at either one of them, with the 50-day being the most important, it tells you there's still a downward bias. I'd say we're looking at a short-term move higher in XLE before we find out if the trend is validated. How about the financial sector? Boy, this thing sure broke out. Price bullish across the board. Momentum on the 21-day bullish. 50 flipped back to bearish above all the key moving averages. All the momentum screens are up. And what do we see? Well, maybe those share buybacks are finally kicking in. And what did we learn here? This volume profile that was looking as a sell, like a sell zone, because remember, price would go down, hit here, get rejected up here, rejected. Well, turns out maybe that was all those share buybacks drove through the upper end of the supply zone, which would suggest a breakout higher in financial stocks. But will the bond market put an end to that? Well, we'll take a look at that soon enough. So what you see right here at 36.50 in that zone, that's where your buyer's at. Major support. Obviously, we know the banks are buying their shares back, not doing as much lending. We'll talk about that on Monday, of course, on the unnamed show. Industrial sector XLI, no change here, remains above its moving averages. All long-term momentum screens are good. Let's take a look and see what XLI is doing. And that volume support line, which was resistance, turns out here's your buyers. I mean, it's interesting. You see it came down, rejected, came down, rejected. And doesn't it look a lot like XLF? Looks very similar to XLF. but it's running right in here to where you see sellers. You see sellers back here in May and late May, and now here in mid-August. So I wouldn't call this a triple top. It's not technically. I mean, there are 3 tops, but it doesn't match a very clear pattern in that. For the moment, though, you've got lots of support at 103, and but no clear direction. I mean, it looks like it should go higher, but you got such a tight range there. How about the utility sector? Bullish, bullish, bullish. Let's take a look at the utilities. Haven't looked at that. I haven't looked at any of these in a while. Now, we back at new all-time highs. No, but we're getting close to that. And you can see the last time utilities were up here was back in February of 2020. That we're selling there before they collapsed. So it's broken out of these recent highs and running into a soft bit of selling there. We'll see if that holds. Utilities late cycle indicator for sure. Lots of support around 65.25, and there is your base for this move higher. The question is, you have to look at this bigger picture chart and ask yourself, do you think it breaks out new all-time highs? Because otherwise, you're buying. You can see there's the last bit of resistance is right here at right above right around 69. Question is, do you want to buy high and take it higher? Could do it. Your call. Let's go on to gold miners. Oh man, some bad. There was a chart that I did look at while I was gone. I did check. I did see this, and oof, some damage there. We're going to look at the juniors too. Price, boom, bearish across the board. Momentum still bearish, below all key moving average. 1 month momentum is now, it went from positive and rising to negative and falling. Big change. 12-month momentum negative and falling. This is not the chart you want to look for unless you're starting to look for a bottom. Let's start out first with GDXJ. And why were we looking at GDXJ? Well, you may remember last week it was below this level. It broke right below 42.85. It's come back up to confirm this. It needs to go higher. The trend is clearly lower on this. The big support level, at least on the 2-year chart, is at 37.86. You can see that where a lot of shares were transacted. This is trend lower for GDXJ for sure. Doesn't mean the short term can't pop higher, but let's take a look at GDX. What are we seeing here? Path of least resistance still appears to be right around 31, retesting to retest this big base of support where buyers have been at. Every time buyers come in, they drive it up. They just can't move the ball. It's not sustainable. If it breaks 31, I mean, it wouldn't surprise me if we see it move up to 33 early next week and get rejected here, maybe even fill the gap into 30 and mid 34s. It's possible. The 50-day moving average is guiding lower. You see it turning lower. But if this breaks 31, now you're looking into the high 20s as the next move. And you can see there's just a ton of sellers sitting up here at 34.85. So even if the bulls get up here, remember what you're turning in. You're fighting sellers, lots of sellers. All right, let's go on to emerging markets. Remember, if you're bullish on the miners, you got to be bullish on the metal, and you got to be bullish on emerging markets. Price momentum, all bearish, below all the key moving averages. Unchanged. 1 and 3 month momentum are negative and rising. 6-month negative and falling. 9 and 12 month negative or positive and rising, not negative. They're green. What are we looking at here, Steve? Let's go on to emerging markets, and let's zoom out on this picture because it's pretty clear this is not a bottoming pattern. This is a topping pattern. It's now below all the moving averages. So got below the 200-day moving average, came up, touched it, rejected. It's now following the 21-day moving average. It's rejected against the 50-day, rejected against the 100-day. You can see the sellers here at 54. If there's anything that's telling you that the reflation trade is not working out, it's emerging markets. Remember, this is heavy in China. Telling you the next path for EEM is back down in here to the 50s, where notably a lot of U.S. buyers showed up. So see if they're eager to buy again. All right, now you want to talk about the high yield bond market. The people keep bidding yields lower, which is crazy. I haven't looked at this since last week. Let's see, prices turn bearish on the 50-day, above the 9-day moving average. Not a big change there. 1 and 6 month momentum are negative and rising. Let's see if people wanted to take more risk in high yield bonds. Let's see, where are HYG? There it is. And They did. They came down. Well, look at that. You can see the trend now, bro. The moving averages have not been very helpful with HYG. How do we know? We'll look back over a year. They bounced back and forth, back and forth between them. So after making new all-time highs late in June, and they couldn't breach them in late July, here we see where buyers are clearly at. So buyers are clearly at this volume profile line of 87.16 and below. So what's the trend for HYG? You have to say higher because it's where the buyers are at. I mean, they're right there. They're coming in. Every time it gets below here, they're bidding this thing higher. Very, very clear. HYG makes another run up. All right, how about the one you've been waiting for, our headline, rally confirmed? Well, that's long-term Treasury bonds. Take a look at TLT. You might be amazed to see this is how rallies happen. You see price momentum all bullish. That's good. Only moving averages below is a 21-day, likely not to last. That's likely to go green soon. 1, 3, and 6 month are positive and rising. The 9 and 12 went from negative rising to negative and falling. Not a big indicator. I mean, these are very long indicators, so I suspect they'll turn back pretty soon. But anyways, let's look at TLT because, we talk about looking at the charts to determine if there's a rally building. Now, people said this wasn't a bottom. It was. People said this wasn't a rally. It was. People are saying that this is going to get rejected and turn into a major flush lower. Well, it doesn't certainly look like that is happening at all. What has happened here is it crossed the 50-day moving average. Is one of the key things to look at is crosses of the 50-day or any other moving average you like. You want a slower one? Cross the 100 and confirm. You want a faster one? Go with the 21. Want one really fast? Do the 9. You want to be as slow as a snail? Go with the 200. You can use them all the same, but what do you see? Cross of the 50-day. It climbed up. Now, how do you know rally is confirmed? When it confirms its moving average. Now, you say, what? It dipped below. So what? It dipped below a little bit. The first one confirmed. The second one dipped briefly below, closed above it, and then boom, big rally. If you look at this big rally on the 10-day, all you can see, or maybe we need to go to 30-day. I did look at this chart. Yeah, you can see it just breached this volume profile line up into here, telling you that despite all of this selling pressure through here, people were mopping this up and buying everything below there. And they did, and prices shot back up here. And that tells you the trend based on the 50-day moving average is higher. It tells you from a volume profile that there's support down here. And the next move for TLT is to get back up into the 150 range. But it's very clear. This is what rallies look like across the 50-day and a confirmation. You're seeing it here. So the next move is we'd like to see us get past the 21-day moving average and then, of course, break through this 150, we'll just say 152 to 153 range. After that, what do we have on TLT? Up into the 156s, and that's where, by that point, a lot of momentum algorithms are switching and buying, and the sellers won't be able to put a stop to that. How about gold? We want to see if you're bullish on the miners, you need to be bullish on the metal. Remember, the metal follows the miners. Generally, price on 21-day flipped bearish. It's now back above its 9-day moving average. 1 month momentum now slipped to negative and falling. 6 and 9 month momentum up, negative. This is positive sign, negative and rising. So let's see what's going on with gold. And big rally coming out. This is interesting. I did see this move lower. This is right as I was leaving for the Blockworks conference. Came crashing down, and I looked, wow, right into support, right where it was before. 70. I like 78 is where I got my line, but 1673. You see the low there. It doesn't matter. Came in there and then slammed right back up into resistance. Briefly held that, went higher, and guess what? It's sitting back into another zone of where sellers have previously been at, and above that is where sellers are at. So what do we know? Buyers are eager to buy the 1687 range. Sellers keep pushing it lower and lower, and if we zoom out big enough, you see what becomes a big topping pattern that, as I've said for a long time, break 1678, and there's your move down to in the 1500s, and perhaps if it gets out of control and the reflation trades off, you can get all the way down into the 1300s, depending on if the market unwinds big enough. while in the short term, gold can actually rise here and move back into, say, the 1800s. We saw that potential on the miners moving higher. Remember, the overall big picture trend is lower. Let's take a look at silver. Oof, wow. Bearish price, bearish momentum, below all key moving averages, below all the momentum trends. Geez, 6 and 9 month negative and falling. Ugly, ugly picture. And I haven't looked at silver in a while, so let's go on. And ooh, there we go. Let's see. It's almost broken out of this big range. So it came down. Wow, it really got hammered there into the $22 price range, coming back up into the bottom of what was a buy zone. Now, why is this key? Is because if the people that were buying in the $23 to $25 range, which is roughly what this buy zone is at, have given up on their positions and turned into sellers, this will get rejected and silver will roll over and head lower, and that will bring gold with it. So that's what happens when people don't get the price direction they want. They flip teams, they turn. So you have buyers that potentially now turn to sellers. So could silver drive up higher? Let's zoom in a little bit. Let's maybe zoom in more. Let's get into the 30-day. Gee, there's not a lot of volume there. Could we see it move up into, say, the mid-24s? Yes, absolutely. You see there in the 10-day, there's clearly buyers there. So we'll say the short-term trend is up, but the big picture trend not pretty at all. Last but not least is the dollar. Price, bullish across the board. Momentum, bullish across the board, below 9 and 21-day moving averages. 1 month momentum now flipping positive and rising into the green. Let's say, remember, the people keep counting the dollar out. Not sure why. There it is. I remember here recently that when this happened, okay, the dollar's over, it's dead. Well, 93 is just where sellers are at. 93 is where sellers are at. Sellers are at. Sellers are at. And sellers are defending 93 because if this thing gets over 94, we've looked at wheels come off bust, and you can see over 94, there's not a lot of resistance back up in the 97. Financial conditions tighten. The bond market is already telling you that this is likely probability. So the trend right here for the dollar is good. I would not worry about this hard selling on Friday. The trend overall is that this is indeed, look at it. This is how did someone say this is a topping pattern? You have a bottom here, reconfirm the bottom, reconfirmed again, and just sellers at 93, and every time it gets pushed down, the buyers are there. That's what a bottom pattern is telling you, and you see it in the screens here, and it all looks good. Anyways, we'll see you on Monday for, again, the show with no name. I'm your host, Steven Van Metre. Thanks for joining me. Bye now. The content of this video is provided as educational information only, is not intended to provide investment or other advice. This video is not to be construed as a recommendation or solicitation by or selling security, financial instrument, or participate in a particular trading strategy. This video was prepared by Steven Van Metre in our own personal capacity. The opinions expressed in this video that do not reflect the view of Atlas Financial Advising or Steven Van Metre Financial.